Today, we're diving deep into a topic that's been buzzing like crazy, Shiba Inu. You've seen the headlines, right? Shiba Inu burn skyrockets. Sounds super bullish, almost too good to be true. But here on Zacchy Crypto Update, we don't just look at the surface. We dig underneath the headlines, into the cold, hard data, to tell you the full story. Because what if this massive burn, this seemingly positive news, is actually masking some serious red flags? Stick with me, because by the end of this video, you'll understand exactly why caution is absolutely crucial for Shiba Inu right now, and what real indicators you need to watch to protect your crypto portfolio. Let's get into it. But first, a quick heads up. Please remember that cryptocurrency investing carries significant risk. The information shared in this video is for educational purposes only and should not be considered financial advice. Always do your own research and consult with a financial professional before making any investment decisions. I'm here to educate, not to tell you what to buy or sell. Alright, let's kick things off with the big news that caught everyone's attention, the Shiba Inu burn rate. We saw a mind-blowing 2,408% surge in Shiba Inu's 24-hour burn rate, incinerating nearly 40 million tokens from circulation. That's a huge number. For those new to crypto, token burning is essentially sending tokens to an unusable wallet address, permanently removing them from the total supply. The idea? Reduce supply, increase scarcity, and theoretically, drive up prices. Now, alongside this massive burn, we also saw a 3.37% drop in exchange net flows. What does that mean? It means fewer Shiba Inu tokens were flowing onto exchanges than flowing off them. When tokens move onto exchanges, it usually signals an intent to sell. So, fewer tokens hitting exchanges could imply less selling pressure. On the surface, this sounds like a perfect storm for a price pump, right? Indeed, during that same period, Shiba Inu's price did climb by 2.69%. Many in the Shiba Inu army probably saw this and thought, finally, to the moon. But here's where my alarm bells start ringing. While the shrinking supply does hint at bullish pressure in the long term, we have to ask, is this burning activity sustainable? Is it truly a reflection of organic demand, or just a short-term anomaly? Because without sustainable demand, even massive burns can't carry a price indefinitely. It's like trying to bail out a leaky boat with a teacup. You need to fix the leak and keep bailing for it to matter. This is why, as experienced crypto analysts, we must exercise extreme caution. Don't get swept away by short-term optimism based solely on this sudden burn activity. The broader context, the underlying fundamentals, need to be weighed heavily before we assume this is the beginning of a larger, sustained rally for Shiba Inu. Because often, what looks good on the surface hides a very different story beneath. Now, let's peel back another layer and look at the on-chain data. This is where we get to see the raw, unfiltered truth of what's happening on the Shiba Inu blockchain itself. And I'm telling you, despite that short-term enthusiasm from the burn, all major on-chain indicators are currently flashing bearish signals. Let me break down what these metrics mean and why they're critical. At the time of this analysis, this metric was barely positive, at a paltry plus 0.17%. What is net network growth? It essentially measures the number of new addresses interacting with the network for the first time. Think of it as user adoption. A healthy, growing project sees a significant influx of new users. A minimal positive growth, like what we're seeing, tells me that new user adoption is stagnating. It's not necessarily declining, but it's not expanding rapidly either. It's like a business that's not attracting many new customers. It's hard to grow revenue that way. This one dropped by a significant minus 4.29%. What does in the money mean for crypto? It tells us the percentage of current token holders whose average acquisition price is lower than the current market price, meaning they are currently in profit. A drop here means fewer Shiba Inu holders are currently sitting on profits. This is a crucial psychological indicator. When fewer people are in profit, the selling pressure from those looking to break even or minimize losses can increase if the price starts to dip further. It reduces the overall profit cushion in the market. This metric dipped by minus 0.03%. Now, concentration in crypto refers to the distribution of tokens among holders, specifically looking at the percentage of supply held by the largest wallets, often called whales. A dip, even a small one, suggests that whale involvement is weakening. Why does this matter? Whales often drive significant price movements due to their large holdings. If they're reducing their concentration, it indicates they might be reducing their exposure or simply not accumulating. This isn't a good sign for strong, sustained upward momentum. This fell by -4.18%. Large transactions track the number and value of transactions exceeding a certain threshold, usually indicating significant movement by institutional players or large individual investors. A decline here further supports the idea that smart money interest, those big players who can move markets, is fading. If the big players aren't making moves, it suggests a lack of significant conviction or accumulation. So here's the kicker. We have this short-term price climb, fueled by a massive burn, but underneath it all, the core network strength, user adoption, and crucially, smart money interest are all showing signs of weakness. This contradiction, this divergence between price action and underlying on-chain data, is a classic red flag. It tells me that overextended bulls, those betting solely on the recent burn momentum, might be in for a rude awakening. It's a warning. Don't just look at the shiny new toy, the burn rate. Look at the engine that powers the whole machine. Now, let's shift gears and look at the technical picture, where Shiba Inu's price is currently sitting and what obstacles it faces. At the time of our analysis, Shiba Inu was consolidating just above the $0.40's 1,311 cents support zone. Think of support as a floor where buyers tend to step in and prevent further price drops. Holding this level is absolutely crucial for the bulls. However, the real challenge lies above us. Shiba Inu is currently struggling to break the 0.382 Fibonacci retracement level, which sits around $0.40's 1,461 cents. For those unfamiliar with Fibonacci, these are key price levels derived from a mathematical sequence, often acting as strong resistance or support. In this case, $0.40's 1,461 cents is a significant hurdle. A truly bullish scenario for Shiba Inu to escape this bearish pressure would require a decisive reclamation of the entire $0.40's 14 cents range. This is where heavy resistance lies, meaning a lot of sellers are likely waiting at these price points, ready to offload their tokens and push the price back down. Breaking through this range with strong momentum would signal a significant shift in market sentiment. Now, let's look at the MACD, the Moving Average Convergence Divergence. This is a momentum indicator, and right now, it's showing narrowing momentum with a potential crossover forming. A bullish MACD crossover could signal an upward trend, but the narrowing momentum part is key. It implies indecision and a lack of strong conviction from either buyers or sellers. It's like a tug-of-war where neither side is really winning. But here's the critical downside risk. If Shiba Inu fails to hold that $0.40's 1,228 cents support level, we could see a much steeper correction. Where could it go? The next major target, according to our analysis, is the 1.618 Fibonacci level at $0.50's 995 cents. That's a significant drop, potentially wiping out recent gains and putting many more holders out of the money. So, as you can see, Shiba Inu's price action is precarious. It's hinging entirely on the bull's ability to defend these key short-term support levels and then, crucially, flip resistance into support. Without that, the path of least resistance looks to be downward. It's a delicate balancing act, and every single trade counts right now. Now, here's where things get a bit puzzling, and why it's so important to look at multiple metrics. Despite all those bearish on-chain indicators we just discussed, the address statistics reveal some notable user activity. New addresses jumped by a whopping 28.87%. This means a lot more new wallets are being created and interacting with Shiba Inu for the first time. Active addresses rose by 47.57%. This indicates a significant increase in the number of unique addresses involved in transactions over a specific period. These numbers, on their own, sound incredibly bullish, right? More new users, more active users. This usually suggests growing interest and adoption. But then we have this. Zero balance address creation surged by 117.39%. What are zero balance addresses? These are wallets created that have no tokens in them, or quickly had tokens moved out. The key takeaway here is the disconnect. We have this spike in new and active retail addresses, suggesting growing interest from smaller investors. However, we don't see a matching improvement in whale participation or profitability metrics. Remember, we just talked about concentration dipping and large transactions falling. This tells me that while retail interest might be bubbling up, it's not being backed by the smart money. The larger players who can provide the necessary liquidity and sustain buying pressure for significant price appreciation. It's like a lot of small boats entering the harbor, but the big cargo ships are sailing away. So, while this address momentum offers a glimmer of optimism, it should not overshadow the weakening fundamentals and dwindling whale interest we're seeing on-chain. Without that backing from larger players, this retail-driven activity might not lead to sustainable growth and could easily fizzle out, leaving smaller investors holding the bag. Let's move on to something highly relevant for traders, especially those using leverage, the liquidation heat map. This is a powerful tool that shows where large clusters of leveraged long and short positions are likely to be liquidated if the price moves against them. Think of it as a map of potential market fireworks. Our 24-hour liquidation heat map for Shiba Inu revealed high-risk clusters near $0, 138 cents. This indicates that there's a significant amount of aggressive short positioning at that level. What does that mean? It means many traders have bet that Shiba Inu's price will go down from here. And if it goes up past $0, 138 cents, their positions will be automatically closed at a loss. This is called a short squeeze. If Shiba Inu does manage to break above $0, 138 cents, we could see a chain reaction. As these short positions get liquidated, it creates a cascade of buy orders, which can rapidly push the price even higher, causing a short squeeze and a quick price spike. This is a potential upside catalyst, but it's driven by forced buying, not necessarily organic demand. Conversely, we have downside clusters between $0, 126 cents and $0, 124 cents. These are significant risk zones where many leverage long positions, traders betting on the price going up, are sitting. If bulls lose control and Shiba Inu's price falls into this range, we could see a similar cascading effect, but in reverse. Long positions would get liquidated, forcing sell orders and potentially sparking a rapid price plunge. This is what we call a long squeeze. What this tells us is that volatility is highly likely to increase as Shiba Inu tests these key zones. Liquidation events, whether short or long, can act as major catalysts, dictating the next significant move. For traders, this means you need to be incredibly alert to how these leverage bets unfold over the next 48 hours. These aren't organic price movements. They are driven by the forced closing of positions, and they can be brutal. Until then, I'm going to be straight with you. This recent rally, fueled by the burn hype, appears to be overstated. The market for Shiba Inu may very well remain stuck in short-term volatility, vulnerable to significant pullbacks. Don't let the headlines fool you into making emotional decisions. Look at the full picture and understand the underlying data. That's it for today's deep dive into Shiba Inu. I hope this analysis has given you a clearer, more nuanced understanding of what's truly happening behind the scenes. Knowledge is power in this market, and that's what Zacchy Crypto Update is all about. If you found this video valuable, please give it a big thumbs up. It really helps the channel grow and reach more people who need these insights. And if you're not already subscribed, what are you waiting for? Hit that subscribe button and ring the notification bell so you don't miss any of my future updates. Got any thoughts on Shiba Inu? Drop a comment below. I love hearing from you and engaging in discussion. Thanks for watching. Stay safe out there in the crypto markets, and I'll see you in the next video. Peace out, crypto fam.